Extra space storage stock, ticker symbol EXR. Is this the best REIT to buy right now? EXR stock is down 28% on the 1-year chart, which is quite a lot of course, especially since the S&P 500 is down only 16%. On the 1st of November, EXR presented quarterly results where they beat on both FFO and revenue by a small margin. For the upcoming earnings, analysts expect a miss, which is of course very interesting. The reason why people love EXR is because of the dividends. We have a dividend yield of more than 4% and the 5-year growth rate also looks very attractive. But does this mean that EXR stock is a buy at current prices? Well, in this video I'm going to show you real quickly what EXR does, the most recent earnings, the historical returns, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Extra Space Storage do? Extra Space Storage owns and operates over 2,000 self-storage properties in 41 states. The company's stores comprise approximately 1.4 million units and approximately 152.6 million square feet of rentable space. If we dive in the most recent earnings report, we see that EXR achieved net income attributable to common stockholders of $1.65 per diluted share, representing a 17.9% increase compared to the same period in the prior year. A FFO of $2.16 per share, representing a 19.5% increase year over year, which is great in my opinion. EXR increased same-store revenue by 15.5% and the store net income NOI by 16.4% year over year, which is also great in my opinion. EXR has a same-store occupancy rate of 95%, which is down from last year, so this is something to keep your eye on. You don't want to fall below 95%. If we check the portfolio breakdown, we see that 48% is wholly owned consolidated, 14% is by joint venture and 38% is managed. To me, this looks like a decent breakdown. Another thing that I really like is the fact that EXR has the highest 5-year average same-store revenue growth, expenses and NOI versus the major competitors. It means that they are growing at the highest rates here. And it's the same story with the core FFO growth, which is one of the most important numbers with REITs. And it's also the same story with the dividends. It's growing at the highest rates with EXR. And in this graph we see that Extra Space Storage has roughly 8.7% market share. Public storage is the biggest with 10%. Around 25% is non-REIT and non-institutional quality, and 41% is non-REIT institutional quality, meaning there's plenty of room to grow. And that's also reflected in this graph here. Wholly owned acquisitions investments is growing at a high rate. And they acquire and open more and more stores every year at consistent levels. Together with Cube, EXR acquires the most stores in this industry, which is a good sign to me. The last thing that I want to discuss here is the full year 2022 outlook, which will be reported very soon. A core FFO of $8.3 to $8.4, a same-store revenue growth of 16 to 17%, and a same-store NOI of 18.5 to 20%. To me, these numbers look very good. And now that we know more about this company, it's time to check the fundamentals of this stock. But first, if you have made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Extra Space Storage is a 19 billion market cap company with a PE ratio of 20. But since this is a REIT, I don't want to focus that much on the PE ratio, but use the price to FFO. Price to FFO is at 19.38, which is a bit on the high side in my opinion. I prefer 16 or lower, so this could indicate that we pay a premium for this stock. Later in this video I will show you my 3 price targets for EXR, so make sure to watch until the end, since price to FFO is only telling a small part of the full story here. revenue is at 1.84 billion. And in this graph we see that revenue is going up quite nice and steady. During the lockdown periods, revenue took a big jump. I think revenue will slow down a bit from here. Net income is at 924 million, which gives us a profit margin of 50%, which is very nice since it's above the 5-year average of 42%. So this looks really good to me. Margins are increasing. EPS is also growing quite a lot over the past couple of years. For a REIT, this looks pretty good. Price to free cash flow is at 18.5, which is roughly the same as the price to FFO. To me, this looks pretty okay. I would prefer a little bit of a lower number here, but it's not a problem for me right now. Analysts expect EPS to grow at low single digits, which is pretty good for a REIT, to be honest. Revenue is expected to slow down quite a bit, which kinda surprises me, since we saw in the earnings report that EXR is growing at the highest level in this industry and is planning to acquire more stores. So that's something to keep your eye on. Return on assets is sitting at 7.6%, which is pretty good for a REIT. And it's the same story with the return on equity. Return on invested capital, the most important number here, is at 7.1%, which is also quite good for a REIT. I really like it when the current ROIC is higher than the 5-year average, so this comforts me a lot. Current ratio is at 0.49, which is fine by me. I prefer this number to be below 1.5. A thing to keep your eye on is the total debt and total cash. I prefer companies who can pay down at least a third of the total debt with the total cash. Right now, total cash is at 141 million, while debt is at 7.2 billion. So it's very important that free cash flow is growing, since this is used to pay down debt, do acquisitions, buy back shares and a lot of things. In this graph we see that free cash flow was growing quite nice and steady in the past couple of years. However, last year it went down, so this is definitely something to keep your eye on. If we check the shares outstanding, we see that it's going up quite a lot in the past couple of years. Usually this is not a good sign, but REITs issue new shares to raise capital and grow the business, so I'm not worried that much about this number. Next up are the dividends. Dividend yield is sitting at 4.1%, which is a really good number in my opinion. Annual payout is at $6. The payout ratio displayed here isn't correct. Earlier in this video we saw that FFO is at $2.21, and if we divide $1.5, which is the quarterly dividends paid, by 2.21, we have a payout ratio of 67%, which is pretty good for a REIT. The 5-year average growth rate of the dividends is at almost 14%, which is really high, and I do like this number a lot. EXR grew the dividends for 12 years in a row, which is very impressive. But does this mean that EXR stock is a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 7.5% because of the historical averages and the expected growth we saw in the earnings report. For the mid assumption I'm filling in 10% and for the high assumption I'm filling in 12.5%. For the profit margin I'm filling in 48, 50 and 52. For the free cash flow margin I'm filling in 56, 59 and 62%. PE ratio is not the correct metric to use for a REIT, but we have to fill it in, so I'm putting in 16, 17 and 18. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now extra space storage stock is at $151. I hit analyze and we see a lot of green numbers. I don't pay attention to the PE ratio since this isn't a great way to value a REIT, so I'm only focusing on the discounted cash flow value. We have a low price target of $131, a mid price target of $172 and we have a high price target of $226. To me, the mid price target of $172 is the most justified here, since I expect growth to slow down just a little bit and the rest of the numbers to stay at current level. My final conclusion on the stock is that I really like the business behind it. It's a niche industry where they are growing at the highest level versus the major competitors. On top of that, there's plenty of room to grow and the dividends also look very attractive. Right now I don't own any shares of EXR stock, but after analyzing them, they have caught my attention. So I added them to my buy list, and whenever the time is right, I'm going to buy them. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.